Today, we're diving into a trading concept that pushes aside all those complex, confusing indicators and focuses on one simple, powerful word: location. Seriously, this one idea could completely change the way you look at a chart. We've all heard this 1,000 times when it comes to real estate, right? Well, trading educator Oliver Velez makes a pretty compelling case that this exact same principle is the secret sauce for consistency in the markets. The whole idea is that where your trade kicks off has a massive, and I mean massive, impact on whether it succeeds or fails. Just think about it like this for a second. You can have a totally broken down shack, but if it's sitting on a prime piece of beachfront property, it's still worth a fortune. The location saves it. On the flip side, you could build the most beautiful, state-of-the-art mansion, but if you build it in the middle of a swamp, well, good luck selling that. It's the same thing in trading. A fantastic location can actually rescue a sloppy entry, but even the perfect tactic will probably fall apart if you launch it from a bad location. Okay, so if location is everything, how do we actually find it on a chart? Well, this strategy gives us a map by breaking the chart down into 7 very specific trading zones. And the best part? These zones work everywhere. We're talking stocks, futures, forex, on any time frame you like. So here's the basic layout. It all revolves around this one central price zone, this block in the middle. For now, let's just call it the block. And you've got 3 zones that live above it and 3 zones that live below it. Where a stock is relative to this block tells you pretty much everything you need to know. Let's start with the most powerful spot on the map, the zone that's sitting just above the block. When prices are here, that block acts like a concrete floor, a solid bedrock of support. This is by far the highest probability spot to be looking for long trades. The rule is simple. This is a buy-only zone, period. You don't even think about shorting here. All right, now let's flip that on its head. What happens if the price is trading just below the block? The whole dynamic reverses. Now that block acts like a heavy, oppressive ceiling, a thick cloud of resistance pushing prices down. This is the absolute best, the juiciest location to be betting on a move lower. So you guessed it, this is a short-only zone. Trying to buy here is just, well, it's like banging your head against a brick wall. So what if the price is just chopping around inside the block itself? The answer is simple. You do nothing. This is the trap zone, and the name says it all. The price action in here is messy, it's erratic, it's unpredictable, kind of like an animal rattling around in a cage. The professional move? You sit on your hands and you wait patiently for it to break out, either above or below. Okay, so by now you're probably asking the big question, right? This block thing seems to be the center of the trading universe. So what in the world is it made of? How do we actually draw it on our charts? Well, this all-powerful central block has a name. It's known as the Fabulous Four, or Fab Four for short. And the name comes from the 4 key ingredients, 4 pieces of market data that all come together to create this incredibly predictive zone. So what's in this secret sauce? First up, we've got 2 classic moving averages, the 200 period, which gives us that long-term big picture trend, and the 20 period for the more immediate short-term momentum. Third, a super important psychological level, yesterday's closing price. And finally, we look at the price action from the last hour of yesterday's trading day because that area often sets the entire tone for the next morning. Okay, so we've got the ingredients, but let's get practical. How do we actually build this thing? I'm going to give you the blueprint you can use every single day before the market even thinks about opening. Here's how you do it, step by step. First, you're going to plot your 200 and 20 period moving averages on your chart. Easy. Then just draw a line at yesterday's close. Next, you look at the last hour or so of yesterday's session and mark the high and the low of that period. Now you have your 4 reference points. And here's the key. You find the absolute highest price among all 4 of those things and the absolute lowest price. That range, that becomes your block. You just draw a rectangle connecting that high and that low, and then you extend it out into today's session. And that's it. You've got your Fab Four block. And think about the power this gives you. By doing this quick bit of homework before the opening bell, you start your day with a roadmap. You instantly know if the market is opening in a prime buy zone, a prime sell zone, or that dreaded trap zone you need to stay away from. Now, for those of you who really want to find those A-plus home run setups, there's another layer we can add to this. It's a technique called the trifecta. The trifecta is all about alignment. It's about getting confirmation that you're in a perfect location, not just on one chart, but across multiple time frames. A true trifecta happens when, say, your short-term, medium-term, and longer-term charts are all screaming the exact same story. So check this out. Imagine a stock opens in that perfect shorting spot, just below the block on your 2-minute chart. Okay, that's a high confidence signal right there. But then you flip over to your 5-minute chart and bam, it's in the exact same perfect spot. Your confidence just went through the roof. And when you check your 15-minute chart and see it a third time, that's the trifecta. That's the wow moment that gives you maximum conviction to take the trade. You know, when you really get this, it totally transforms how you approach the market. Instead of just chasing random patterns all over the place, the Fab Four acts like your compass. It gets you oriented before you even think about putting on a trade. And honestly, this might be the biggest advantage of all. It's the psychological edge it gives you. When you know you are trading from a prime location, all that hesitation and fear starts to melt away. It gives you the confidence to pull the trigger decisively because you know the wind is at your back. It really just boils down to what Oliver Vellis says here. The more care you take in finding a solid location, the better your trades are going to be. It's a direct link. You're shifting your focus from just finding any old pattern to finding the right pattern in the right place. So the next time you're getting ready to click that buy or sell button, just stop for a second and ask yourself this one simple question. Are you setting up shop on prime beachfront property, or are you about to build a mansion in a swamp? The answer could make all the difference in the world.